Good evening. Come on in. Of course, I'm sharing this out, so you do the same. I'm going to ask that you do the same. If you're joining me on YouTube, go ahead and hit that subscribe button. Share this out with 3 of your friends. Tonight, we're going to talk about tax preparation versus tax planning, the what and the why. So come on in. I'm going to give it a few minutes here for some people to hop on and join us for this live. Come on in. Come on in. I hope everyone is having a wonderful Tuesday. It's nice and sunny where I am. I don't know about where you are. So come on in. Come on in. Let's chat it up a bit. All right. So I'm going to go ahead and get started. For those of you who are new to my page and you do not know me, welcome, 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 welcome. So you're going to see me going between the 2 screens. I have IG on one device and then YouTube and Facebook on the other, because IG has not integrated to be able for us to go across multiple platforms just yet. So I am going to kind of be back and forth talking to each of you. Feel free at any time to join in the conversation. I may actually hold questions until the end, just so that I won't lose my train of thought. I tend to go left sometimes. So I wanted to, kind of try to switch it up a little, because typically I'll answer questions along the way. But what I'll do now, especially on IG, there's a question box. So if you'll just drop your questions in the question box, and I will be more than happy to go back to your question. For those of you who do not know me, I am Tawana with Bryant Business Solutions, a 100% virtual tax and accounting firm based out of Columbia, South Carolina. And what I do is I offer services from the beginning pretty much to the end. So I stay with you for the long haul. I help you with that business formation process and getting your business up and running, getting it started, and making those elections that you have to make as far as your entity type, educating you as well on the tax structure of your business and those type of things. Essentially, every business owner should have bookkeeping being taken care of within their business, because record keeping is so important. So I provide those type of services as well as your tax preparation services. And we're going to talk a little bit about tax preparation. Once you reach a certain level of net profits when you do your taxes, then we start looking at tax planning and strategies and ways to help you legally avoid taxes and paying taxes, and diversifying that income sum and moving it and shifting it so you won't be paying as much in taxes. Keep in mind, tax evasion is illegal. You will get locked up, so don't play. But tax avoidance is perfectly legal. It's strategies, loopholes, and that's what I spend a lot of my time focused on, studying how can we help this particular client, because no 2 clients are the same. How can we help this client avoid taxes on this income? Some income is just legit. It is what it is. It's straightforward. There's no way around it. But it's important to look at tax planning so you can find ways, because there's ways. You just have to find them. And then from there, we help you then grow and scale your business with CFO strategies. All right. So again, come on in. Welcome to those just joining us. If you'll share this live out with 3 of your friends, just 3, not asking for much, just 3. Share this live out. Someone could use this information. So let's talk about tax preparation. So when you go to someone for tax preparation services, especially as a business owner, when you're going to someone for tax preparation services, what they are doing is more after the fact. After you have had whatever happened in your year, you've kept your receipts, you've kept your records, you've kept your bookkeeping up, and now you come to your tax preparer and you say, hey, I need this work done. It is considered compliance work. It is to help you remain compliant with the IRS. Our job is to make sure that we're not putting you in a position that is going to raise red flags. These are things that typically, as the taxpayer, you're not studying to figure out, oh, okay, this is going to trigger an audit. Not that you can ever avoid an audit. None of us are 100% free of audits, okay? Let's get that understood now. A lot of times people will say, oh, I hope you avoid audits. It's a lie. Even as a tax professional, our offices, if it starts looking like some funny stuff is going on, or if they just want to question some of our practices, we can be audited. So our job is to make sure that you are compliant with the IRS and you don't have anything there that's going to position you to raise red flags. I implore you, okay? I implore you to, as your professional is talking with you, take notes, okay? And the reason I say that is because there's a lot of information that we give you at one time. There's a lot of questions that we're asking you. I know for my clients, they're not too happy about my tax organizer. I like to get those things in writing so that I can be clear on what it is, the information that I'm getting, so that if there's something that I need clarity on, then I can easily point to it and say, okay, section C3, I need clarity on this, or what about this? It helps me easily identify more areas to be able to help you save. Now, like I said, the reason I though still ask for you to take notes of your own, as we do, is because you may forget. I mean, we're not robots, okay? We don't keep this information and we just house it and it's there. We may forget or miss something that's being said, or we may feel like, oh, it doesn't apply to me right now, so I just won't even think about it. But everything that your professional is asking you, everything that they're saying to you is going to have a purpose. Be it now or later, it's going to have a purpose. So I say take note of that, okay? Take note of exactly what it is they're asking you. And a lot of times I know for my clients, I like to explain why I'm asking the question. I don't just say, oh, let me just ask this question. You can't understand why I'm asking the question. So I like to provide clarity as to why I'm asking the question. Or if I tell you, no, we can't do it this way, this is why. I want you to take note of that. Even, just the same as record keeping. And I know it seems like a lot to keep up with, but as a business owner, you are responsible for your business. At the end of the day, you're responsible for your business. Again, tax preparation is only the after the fact compliance work that we're doing to make sure you're in regulation with the tax code at the federal level, state level, local level, city level, what have you, whichever taxes your state requires you to file. Okay. Tax planning is now we're looking for strategies because the tax laws change. Right now we have so many different new plans in place. And as Congress makes these changes, now we look for strategies and loopholes to help you avoid taxes legally, to help you avoid those taxes based on now what is the tax code. And because they change so often, this is why you should not have tax planning done as a one and done type thing. It's an ongoing process because as the laws change, as different things change, tax code changes once a day, on average. So that means there's 365 tax codes that's changing. Who's going to keep up with that? Me or you? So when those tax codes are changing so often, you want to make sure that the planning is happening, especially as business owners. Now, as business owners, what I recommend, and this is my recommendation, once you see $30,000 to $40,000 in net profit, $30,000 to $40,000 in net profit, then you want to start looking at tax planning in your business. You want to make sure that you start kind of seeking out tax plans and ways to move that money and shift that money to reduce your tax liability. Because even though you may have a lower bottom line, how much in taxes are you paying out still? And this is why we also say, don't let people just say, oh, you need to be an S corp. No, it needs to be assessed to see if being an S corp makes sense for your business. And with tax planning, so what we do is I know in my office, we do about a 45-minute interview session. We ask you a whole lot of questions: where you're at in business, your financials, where are you looking to go in business? What is it that you're trying to do in the next 1, 3, 5, 10 years down the road? So that when we structure your business or we set up these plans, because it may make sense now for you to start investing in certain areas. When we look at that, we have to know exactly what it is that you're wanting for your business, because it's your business. Now, this is a little off topic, but this is part of why it's important to have a business plan in place. This is something that when you get to this $30,000, $40,000 space, you're not trying to figure it out. You're not lacking understanding of where you're at in business. Now you know, okay, once I reach this level, this status, then I know this is how I want to pivot. This is how I want to grow. And this is how we help you to grow. Because now you're moving and shifting that money. Do you need to be paid partially in dividends and then a check? We can't just say that just by glancing at one thing. There's so many variables that go into that. So the reason that tax planning is so important and it's vital, well, the reason tax preparation is vital is, again, to keep you compliant, to make sure you're following the law, to make sure that you're doing what you're responsible for doing as an income earner and paying your taxes. Okay. We're keeping you compliant. Now, the reasons you want to tax plan, of course, paying less taxes overall. That's typically the ultimate goal of tax planning. If you're developing your reduction strategies ahead of time, it would be worth it if it allows you to maximize their benefits, right? So if contributing to an HSA because you have a high deductible health savings plan or health insurance plan, is that beneficial? Does it make sense for you to do that? And there's some strategies surrounding that we would go into more, because now we're in that planning phase. We're helping you break down and understand why this strategy would make sense with your situation. But if you don't have a high deductible health plan, you don't even qualify for an HSA. How do we know that without planning? Okay. Now, the other thing is, time is your friend when it comes to the changes in the tax laws. Okay. Again, tax planning is not a one and done type deal. It should be an ongoing process. And right now, I know next month, so this is my fiscal year end, wrapping up June 30th. So July, the entire month of July, I'll be doing more planning. So one thing that I'm looking at is when I issue a tax plan, it's going to be for a 12-month span. Why? Because there's so many variables, there's so many changes. I want to be able to, or be in a position to, every single quarter reassess and reevaluate your tax plan that's in place. Okay. We want to look at your tax plan that's currently in place. Does it still make sense for you to be doing what you're doing, or do we need to shift? Is it the time to shift because the tax law has changed? When Biden and when they put in all of these changes, they don't wait on a specific time. So if you have that year span that we know most business owners are on a calendar year when they're being taxed. So January 1 to December 31, within that year, what happens? What has changed? Did you move? Did you buy a new building? Did you buy new equipment? Does it make sense to buy new equipment? So time is on your is one thing that we need to look at when we're implementing tax strategies for tax planning. What's true on December 31st may not be true next year. So this is why tax planning is something that's ongoing, that should be happening. Now, on the other side of it is tax reduction strategies sometimes have a strict deadline. There's certain things that you can't do after a certain time period. So you need to have it in place early on so that you can take advantage of the strategies or the opportunity, but you don't know if you're not tax planning. Again, it's responsible of you as a business owner to have tax planning in place, especially once you reach that $30,000 to $40,000 net income threshold. Now, remember again that tax planning is completely different, and it's a different concept than filing your taxes. Your tax preparer is not responsible for your tax planning. When you pay them for tax preparation services, you're paying for just that, the compliance work. Now, if they look at your taxes and they say, okay, X, Y, and Z is happening, maybe you're claiming too many deductions, you need to shift that. Take heed. Listen to what they're telling you. Again, take notes if you have to. If you know your memory, even if your memory is not shot, I say write it down. Write it down. I know a lot of times back in the day, okay, because I've been doing taxes for a while. Back in the day, people would have all their stuff in a folder. Have your little space that you have that stuff so that you can keep up with it. And I'm not saying be a paper hoarder. I'm not saying that. But make sure you're taking those notes. Make sure you have those things in a place that you can refer back to. Because again, your tax preparer is not responsible for providing you with tax planning. They're not responsible. The only thing that they're responsible for is getting that information in the system and making sure that they find as many strategies and ways at that time for what you previously did during the year. How can we reduce some of these costs? What can we what strategy can I use to help minimize what they already did? Because there are some. Or what law applies to help reduce this tax liability for this client? Also, another thing that I noticed throughout the year is a lot of times people really don't understand the tax filing statuses and what your filing status truly is or what it should be. And that's going to be another conversation as we get closer into tax season again. One of the things that I know that I'm going to implement is probably having office hours where you can hop on. I'll help walk you through your tax organizer, or someone from my team will help you walk through completing your tax organizer, helping you understand so you can get those questions answered ahead of time, but also so that you can make sure that you're keeping up with the right things. For example, a lot of times people feel like, oh, at the end of the year, I can just kind of guesstimate my mileage. This is why Schedule C filers are most hit, because that's our mindset and that's our attitude towards it. It's, oh, I'll guess what it is. Now, at Bryant Business Solutions, you come to me with that, and you come to me with a nice round number saying I drove 500 miles. Tawana gonna slide that right back to you and say, no, you didn't. That's part of my transparency. I'm gonna keep it 100 with you. I'm not gonna pretend that it's not gonna be a problem. It's gonna be a problem, and I don't want anything to trigger an audit. And I operate in honesty and integrity of what the tax law is. And no, we don't work for the IRS. We work on your behalf, but we're also that liaison between you and the IRS to, help you understand and help it make sense. So we really have to get out of the attitude of, oh, I just got an accountant. They'll do it. She'll figure it out. Because again, at the end of the day, if the IRS audits, they're going to audit you, not us. Unless our company is being audited. They're going to come to you. And it's going to be, the burden of proof is going to be on you if they question something. not us, to come up with those files. And we can ask you for them. And we're not required by law with tax preparation. We're not required to look at every single document that you have. That's why when you fill out the form and when you sign your tax return, it'll ask, is this information true? and you're signing off on it. So again, even if you're not my client, now my clients know we do a document review, but if you're not my client, don't let anyone push you to just sign something and you don't have some understanding of it. I know you're not going to know the tax laws. I know you're not going to know the ins and outs of it. I know you're not going to have complete 100% understanding, but have some level of understanding regarding your financials because they're yours. As far as your business, be accountable for your business. And we're only a small part of your team with a huge impact, but a small part of your team. Does anyone have any questions? Questions. Of course, I try to keep this kind of short. Some days are longer than others. I try to kind of keep it a little short. If you got any questions regarding tax preparation, tax planning, or something that you just don't quite understand, let me know. Drop it in the chat. I know there's a delay, so I'll wait a second before I move on or head out. Did I put my, okay. I didn't know if my earrings were on. No. All right. Well, if no one has any questions, I thank you for spending some time with me here. If you are catching this on the replay, hashtag replay down below, share this out with a few of your friends. I'm sure. Question from a post you put up yesterday. Okay, what's the question? Did you put it in the question box? Y'all know, look now. Oh, it said no questions yet. Did you? See, this ain't the audio. What's the child tax credit about? So the child tax credit is a refundable credit that's always issued to taxpayers with children usually under the age of 17. So the new change to the child tax credit is, one, it expands to those children that are age 17. It includes them now, and they're issuing monthly payments of those refundable credits, because typically refundable credits on your tax return are credits that are given to you for things that you could be advanced on, and it'll either do one of two things. It'll offset your tax liability. So if you owed, let's say, $5,000 in taxes and your refundable credit is $1,000, it reduces that amount. Non-refundable credits is taken off before you get to that final what you owe in taxes, and you can't get it back in a cash form. You don't always. So there's a couple of nuances to this that people have to understand. Just because you get the child tax credit, it does not mean that you're going to get a refund, because some people's tax liability exceeds the child tax credit or the refundable credits. So that's something that I want you all to take into consideration. Now, what they're doing right now is they're providing an advance. Alexa, pause. Alexa's singing louder than me. So if I'm yelling or sound like I'm yelling, I'm sorry, y'all. I've been trying to talk over that. But so take that into consideration when you receive the child tax credit, okay? This advance that's coming out. You can opt out. They automatically put everyone in, and they're going to look at your 2019 or your 2020 tax return to determine how much they're going to give you in funding. If the child is under 6 years old, you get up to $300 a month for that each child. If the child is 6 to 17, you'll get up to $250 for each child. Okay. That's claimed on your tax return. If you elect to opt out of this, because everybody is just automatically enrolled, which I don't know if that's even a good idea to just automatically enroll people. But if you opt out, you have to wait till like right now. If you opted out by yesterday, you have to wait till September to re-enroll. So if you get the child's tax credit, you will not get a refund for that child next year. No, that's not what that means. They're only going to advance up to half of it. So let's say the child tax credit is $3,000, and let me verify those numbers. Because I don't want to tell you a story about what the actual numbers are. It's 3,000, I want to say, for, where's my little cheat sheet? I have that's in another room. I have a mouse pad with my cheat numbers on it. But let's say up to age 6 is $3,000. They're only going to issue you up to $1,500 of it. They're only going to issue half of it in an advance. And then the other half they'll issue on your tax return. So again, if your child tax credit was only offsetting what your tax liability is, I don't know if that's a good idea to even get it, because now you're going to end up owing more in taxes, or you, of course, naturally, you're going to get a reduced tax refund next year. I'm trying to get those numbers. $3,600 a child for under 6 years old. So half of that will be issued in an advance and split out over July, August, September, July to December. Half of it will be split out over those months. And then for every child 6 to 17, half of whatever your credit would be will be issued out for those children. And then the other half will be applied of the same refundable credit. It'll be applied on your taxes. But again, I don't know if that's necessarily a good thing for everybody, because it's going to put some people in a situation where, yeah, they got the advance. They didn't opt out for whatever reason. Their tax liability is still kind of up there. Now they owe this money. Because before, remember, if it was used to offset your tax liability, you still may have a balance due if you didn't pay enough in during the year. But this is why also it's important that you have your W-4 correct, or if you're self-employed and that's your only source of income and you don't have any W-2 income, that you're paying your estimated taxes quarterly. That's why it's imperative to do that. I think now more than ever, it's going to be very important that these estimated taxes are getting paid, because it's going to kind of put some people in a situation. Oh, what's the amount per child? How does this affect taxes? So if, oh gosh. So if a person gets the tax credit, is that counted as income next year? No, it's not counted as income. However, because I think I answered the other questions, it's not counted as income. I think there's a way to put the question on the screen. Let me see. Boom. But it's not counted as income because it's never income. It's just a refundable credit. But it can reduce what you should have paid. Again, if your tax liability is $5,000, you didn't pay anything in during the year. You got $3,000 advanced. Well, $1,500, let's say $1,500 advanced. Whereas before you would have had $3,000, reducing that $5,000 liability. At the end of the tax year, you owe $2,000, but now you owe $3,500 because you got the rest of that money in advance. Does that make sense? And Facebook, they're not talking to me. What's the amount per child? $3,600 for children under each child Each child under 6 years old, and then 6 and up is $3,000 per child. 6 to 17. So $3,600 if there's any children in the house or any children on your taxes that's under 6. So 0 to 5. And then children that are 6 to 17 is $3,000 per child. And the monthly payments are $250 for the 6 to 17 a month, and then $300 per child for those that are under 6. But they're only giving you half of it in advance. And it's going to affect taxes just based on what your everybody's tax situation is different. It's just going to be based upon whatever your tax liability is for the year, based on your income and any other factors that you have that may offset what your tax liability is. Because some people, and I have business owners that have made multiple 6 figures, but their tax liability is 0 because we've shifted that income different ways. So now their total tax due is $0. So everything else that comes in refundable credits is going to come back to them in a refund. Versus if their total tax due was $5,000, those refundable credits would now just reduce that tax liability. No, thank you, Uncle Sam. Well, if you didn't opt out yesterday, you missed the first deadline. So if you didn't opt out by yesterday for July payment, you're going to get the July payment. And then for September, it's like the last Thursday before or at the end of the month or something like that, last whatever day. They have some kind of weird way that they're calculating it. The other thing that I think is going to cause a problem with is for those families, again, the same as the stimulus payment. What about those kids who are turning 18 and now they're not going to be claiming on their parents' tax return next year? What happens to that? And then there's questions from me. I don't know if anybody else asking these questions, but the other thing is, what about those people who have parents who are not together that they rotate the child from year to year? Who's going to get the advance? Again, another situation that the IRS, or lawmakers didn't really think through. So it has some people, in a situation. I have a client that the child was being claimed on the tax return, and I do the parents and the child's taxes. They're both my clients. And because the child was on the tax return last year, they initially advanced the parent, because the child was 17, didn't get anything on the stimulus for that child. So the child's stimulus is kind of just out there. They don't get anything. So then this year, when this child filed on their own, they got the recovery rebate credit in their tax return, which is a refundable credit. So they got that money via their tax return. Okay. The parents' tax return was showing that they were getting it. Well, then the parents' tax return got held up for several months. And this is why a lot of taxpayers or people who are waiting on refunds, this is part of the reason that they're still waiting. They're manually processing these. So then they made the adjustment for the child getting it now because the child social came through. They made the adjustment and gave her the remainder of her refund. So it's just a lot of stuff, like I said, that the IRS, I just don't think, or not even the IRS, because they don't make the laws. Congress makes the laws, they just enforce them. But there's a lot of things that just was not thought through. It's just give them money, give them money, give them money, and then have people stuck out there based upon whatever their situation may be. And if it's anything different than what they perceive to be standard, then it puts them in a situation. And I think tax is going to be held up again next year. There's people still from 2019 taxes, so the beginning of 2020, that still hadn't received their refunds. Millions of people's refunds are just hadn't gotten them yet. And it doesn't matter whether or not it's a simple tax return or not, because I have one client that it's just them, one W-2, one job, nothing else on their return, and they hadn't gotten their refund yet. And it's been months since I submitted their return. And it puts us in a bad place because we're trying to explain this stuff. And then the other part of it is they're not giving us any direction on it. The only thing that I would implore people who have been waiting for months, though, on their return is to, every state has a tax advocate. Consult with a tax advocate for them to now fight for you to get your money that's due to you, unless the IRS is making adjustments, and they very well may be. And I'm sorry, I'm just ignoring Facebook and talking to y'all over here on IG. I need a dual monitor that's right there in front of me so I can see both right there in front of me. That it. Any more questions? Going once, going twice, and we're out of here. All right. Well, I appreciate you all participating. One, I appreciate you being actively involved in this whole process, in this conversation with me tonight. And I thank you all. You're welcome. I thank you all. I thank you all for tuning in. Again, share this live out with someone. I'm sure someone else could benefit from this information. Even tax and accounting pros. It's like I said, they're not really giving us direction. Some of us are getting a little more information than others. Thank you, Candace. Some of us are getting more information than others, and it's just a matter of where we're pulling our information from. I have quite a few newsletters and different things that I'm subscribed to, so some of the stuff I get ahead of some people. Others, they may get ahead of me. And then there's certain things that I just kind of dig for just because it'll benefit my clients. So these are the conversations that I want to make sure that I'm having to ensure understanding and clarity. All right. If there is nothing else, I will be chatting it up with you. We got one more day and 30 days live. So we'll be back tomorrow. I just don't know exactly what time. My little guest that's normally here, I had to, ditch her for the night. So I had a little time on my hands tonight. She's not back tomorrow. So I'll be able to spend some time with you guys tomorrow. Also, if you have something that you want me to discuss or revisit or provide clarity on, if you don't drop it below this, or if you're, some people a little shy, hit me on the inbox, hit me in the DM, and I'll be more than happy to have the discussion, in a platform for you. And I will chat with you tomorrow. Have a great